This is the channel where we talk about crypto, money, and global finance like professionals, but in a way that is easy for everyone to understand. I know most people don't have the time to watch 10 different videos or follow every single update during the week. So, in this video, I'm putting all the biggest XRP and Ripple stories into one clear breakdown. The goal is simple. You watch once, you understand everything that actually matters. If you get value from this video, make sure to hit the like button and let me know in the comments because that tells me you want more of these weekly all-in-one updates instead of scattered daily clips. This week was important, not because of hype, but because of structure. What Ripple is doing right now shows long-term planning, not short-term price chasing. One of the biggest stories came from IDC, one of the most respected global research firms. IDC officially named G-Treasury as a leader in its 2025-2026 MarketScape for AI-powered enterprise treasury and risk management platforms. This is not a small award. IDC focuses on real-world enterprise use, not marketing promises. G-Treasury was recognized for solving real problems that global companies face every day like real-time cash visibility, liquidity control, complex multi-entity operations, and proactive risk management using artificial intelligence. This matters a lot because Ripple acquired G-Treasury for around $1 billion. Ripple didn't just buy a company, it bought access. G-Treasury already works with major global banks and large corporations. That means Ripple now has a direct pre-integrated path into thousands of high-quality enterprise clients. Instead of selling Ripple products one treasury team at a time, Ripple now enters through a system that is already trusted and already in use. This is a massive shortcut in adoption, and it shows Ripple is expanding far beyond payments into full enterprise financial infrastructure. At the same time, we saw a very important milestone with spot XRP ETFs. Around 800 million XRP is now seeded into these funds. This is not retail speculation, this is regulated capital positioning itself early. The next big level is 1 billion XRP, and the progress so far shows steady institutional interest. This kind of money usually moves quietly before the public notices. Another key update came from Interactive Brokers, one of the largest retail and institutional brokerages in the world. They introduced 24/7 account funding using USDC, allowing traders to fund and trade almost instantly, but the important part is what comes next. Ripple's stablecoin, RLUSD, is being added alongside USDC and PayPal's stablecoin that puts RLUSD directly into mainstream brokerage infrastructure. This is how stablecoins become normal financial tools, not by hype, but by utility. Then we saw Ripple announce a major partnership with LMAX, a large institutional FX and crypto execution venue. LMAX processes trillions of dollars in volume and serves banks, funds, and professional traders. Ripple is committing $150 million to support this partnership, and RLU is being integrated as core trading collateral. This is a big shift. RLUSD is no longer just another stablecoin. It is becoming part of the core infrastructure that institutions use to trade, manage risk, and move liquidity. This also allows institutions to source XRP directly through LMAX, strengthening XRP's role in professional markets. We also heard from Stephen McClure, the CEO of Canary Capital, the company behind the first spot XRP ETF. He explained that over the last 2 years, Ripple has done a strong job integrating the XRP ledger into stablecoins and tokenized real-world assets. His view is that XRP is positioning itself as one of the leading tokens for real-world asset tokenization. This is important because it's coming from someone operating inside regulated financial markets, not from social media speculation. On the regulatory side, Ripple secured preliminary electronic money institution approval in Luxembourg, allowing it to scale crypto-enabled payments across the European Union. This comes right after Ripple secured a similar EMI license in the UK. Together, these approvals give Ripple a regulated base across both the EU and the UK. This does not turn XRP into legal tender, but it significantly reduces risk for banks and fintechs that want to use Ripple's infrastructure, XRP liquidity, and RLUSD in regulated flows. Brad Garlinghouse also spoke about regulatory clarity, emphasizing that clear rules are always better than chaos. Ripple continues to engage with lawmakers to push for workable market structure, and the message is clear. The industry is closer to clarity than it has ever been before. All of this connects to what we are seeing globally. South Korea passed legislation establishing a framework for tokenized securities expected to take effect in 2027. This matters because XRP is one of the most traded crypto assets in South Korea, often outperforming Bitcoin and Ethereum on local exchanges. This gives Ripple even more opportunity to work with banks on tokenization and real-world asset settlement using the XRP ledger. We also heard from Ripple executives like Reese Merrick, who explained how RLD is being used by large enterprises to move funds globally even on weekends. Something traditional banking cannot do efficiently. This is where real adoption starts solving real problems for real businesses. This is only the beginning of the story. But now we start connecting the dots between Ripple's strategic acquisitions, its regulatory moves, and why these actions are creating real institutional adoption, not just hype. One of the biggest takeaways from this week is that Ripple is quietly positioning itself as a global financial infrastructure provider, not just a payments company. Acquiring G Treasury was only the first step. That move gave Ripple direct access to enterprise clients with massive treasury operations. But the next steps are even more interesting. Ripple is integrating RLUSD and XRP directly into these corporate workflows, allowing funds to move 247 across borders and in real time. This is solving a problem that banks have struggled with for decades: operational inefficiency due to delayed settlement, multiple intermediaries, and legacy systems that aren't built for speed. Let's talk about the stablecoin angle. RLUSD is no longer just a token you hold on an exchange. With the LMAX partnership, RLUSD is becoming core collateral for institutional trading, meaning it is now embedded into the plumbing of real-world financial operations. Ripple is committing capital to back this integration, signaling confidence in RLUSD's long-term role. Think about this. Instead of just being a currency for payments, RLUSD is now a working asset for banks, brokers, and funds, helping them move and manage liquidity efficiently. This changes how the market views stablecoins entirely. Most stablecoins compete for retail attention, but RLUSD is competing in a completely different arena: high-value institutional adoption. At the same time, regulatory clarity is starting to emerge in major regions. Ripple securing EMI licenses in both the UK and EU is not just a legal checkbox. It's a green light for institutions that were hesitant to touch crypto due to regulatory risk. When large banks know that an operation is compliant with EU and UK rules, it drastically lowers their risk and encourages integration. Combine this with Ripple's global network and G Treasury's client base, and suddenly Ripple becomes the preferred partner for institutions exploring digital assets. This is the kind of positioning that sets up long-term adoption far beyond retail hype cycles or short-term price movements. The South Korea news adds another layer. With the new tokenized securities legislation expected to take effect in 2027, XRP is in a prime position because it is already one of the most traded crypto assets in the country. This is not just volume for volume's sake. South Korea's approach creates a regulatory framework for real-world asset tokenization, which aligns perfectly with Ripple's ongoing strategy. Essentially, Ripple is ready with both technology and regulatory compliance when this framework comes into effect. Institutional clients can use XRP and RLUSD for tokenized assets with confidence, knowing the infrastructure and compliance are already in place. We also saw insights from industry insiders like Stephen McClure and Reese Merrick highlighting how XRP and RLD are being used in real-world applications. McClure emphasized that XRP is emerging as a leading token for real-world asset tokenization, which is a critical development. It's one thing to have a cryptocurrency that trades on exchanges. It's another to have a digital asset that powers actual business operations, serves as collateral, and moves real money around the globe. Merrick added that enterprises are using RLUSD for operational funding, even on weekends, solving problems that traditional banks cannot. These are practical, measurable use cases that demonstrate adoption, not speculation. Another critical angle is liquidity. By integrating RLUSD and XRP into LMAX and other platforms, Ripple is becoming a primary liquidity provider, meaning it can support large trades and cross-border settlements without friction. Most crypto companies can't offer this because they don't have the infrastructure, partnerships, or capital to back liquidity at scale. Ripple, through strategic acquisitions, regulatory licenses, and partnerships, is building a system where XRP and RLUSD are the backbone of real financial operations. Finally, let's talk about timing. While retail investors often focus on price, what we're seeing here is a slow, deliberate build of institutional adoption. The combination of strategic acquisitions like G Treasury, regulatory approvals in the UK and EU, partnerships with institutional trading venues, and forward-looking positioning in regions like South Korea creates a multi-layered advantage for Ripple. They are not relying on hype. They are creating a foundation that will make adoption of XRP and RLUSD inevitable among large financial institutions. This is where most people miss the story. It's not about a pump today or tomorrow. It's about positioning for real-world, high-volume, low-risk adoption across the globe. And when you look at how XRP and RLSD are already being used, you start to see why Ripple is more than a payments company. It is becoming the bridge between traditional finance and digital assets. Let's dive deeper into how XRP ETFs, stablecoins like RLSD, and Ripple's real-world asset strategies are coming together to create a major shift in global finance. One of the most overlooked developments is how spot XRP ETFs are quietly building institutional demand. With around 800 million XRP already seeded into these ETFs, institutions are starting to allocate capital not for speculation, but for liquidity, settlement efficiency, and real-world asset operations. This is exactly the kind of adoption that has long-term impact because when ETFs hold XRP, it removes that portion from free circulation and places it directly into regulated investment vehicles. This creates both scarcity for trading and credibility in the eyes of traditional financial players, signaling that XRP is no longer a niche crypto. It is a recognized financial asset. Stablecoins play a critical role in this ecosystem, especially RLUSD. Ripple has been positioning RLUSD as more than just a token for payments. By integrating RLUSD into platforms like LMAX, Ripple has created a stable, regulated, and reliable collateral asset for high-volume institutional trading. Banks and brokers now have a token that can move instantly across borders, settle trades in real time, and be used as collateral for transactions that would normally require multi-day settlement cycles. This changes the way institutions think about liquidity and treasury management, because RLUSD is effectively bridging the gap between traditional financial rails and the speed of blockchain. Another major component of this puzzle is regulatory compliance. Ripple's EMI licenses in the UK and EU do more than allow operations. They de-risk institutional adoption. Large banks, asset managers, and fintech companies are often hesitant to work with digital assets due to regulatory uncertainty. With Ripple's licenses in place, these institutions can now integrate XRP and RLUSD with confidence, knowing that regulatory risk has been substantially reduced. This is exactly what allows enterprise clients to move money efficiently and legally across borders while using blockchain technology to reduce costs and increase speed. South Korea adds yet another strategic advantage. The new legislation creating a framework for tokenized securities is expected to come into effect in 2027, and XRP is already one of the most traded cryptocurrencies in the country. This is significant because Ripple's infrastructure is perfectly aligned with these upcoming regulations. When tokenized securities are fully implemented, XRP and RLUSD will already be positioned as primary mediums for settlement and collateral. Ripple is effectively future-proofing its network so that when institutional demand ramps up, it can meet it immediately. The feedback from industry insiders reinforces this trend. Stephen McClure from Canary Capital emphasized that XRP is not just a token. It is a leading candidate for real-world asset tokenization. This includes things like digital bonds, tokenized commodities, and corporate treasury operations. Reese Merrick also highlighted how enterprises are using RLUSD for operational liquidity 24/7, even on weekends. This kind of adoption shows that Ripple's solutions are solving real problems, not just trading speculation. Companies can move funds instantly, manage risk efficiently, and operate without being constrained by traditional banking hours. Liquidity is another key piece of the story. By embedding RLUSD and XRP into institutional platforms like LMAX, Ripple has become a primary liquidity provider. Large trades can now settle in seconds, and banks can manage multi-currency exposure without the friction of traditional intermediaries. This capability is something that most other crypto projects cannot offer because they lack both regulatory compliance and integration with institutional financial systems. Ripple is combining technology, regulatory clarity, and capital to create a robust global financial network. Timing also plays a role. While retail investors often focus on price spikes or hype cycles, Ripple is playing the long game. Every acquisition, partnership, and license is part of a coordinated strategy to ensure XRP and RUSD are embedded deeply into global finance. It's not about a short-term pump. It's about building the backbone for future adoption. Large institutions need reliable infrastructure, and Ripple is delivering exactly that. We also can't overlook Ripple's focus on real-world asset adoption. By integrating XRP and RLUSD into corporate treasury operations, institutional trading platforms, and global banking networks, Ripple is establishing itself as a bridge between traditional finance and the digital asset world. This is why the XRP ledger is becoming increasingly relevant. Transactions settle in seconds, costs are minimal, and compliance is maintained. This combination is rare and highly valuable, which is why we're seeing growing institutional interest. Now that we've covered the foundations, G-Treasury, EMI licenses, RLUSD integration, and XRP ETFs, it's time to connect how all these pieces work together and why this matters for the future of finance. Ripple's strategy is not random. It is methodical and multi-layered. By combining regulatory approvals, institutional partnerships, and real-world asset tokenization, Ripple is creating a system where XRP and RLUSD become the default infrastructure for global liquidity management and cross-border payments. This is not hype. This is building real financial rails that can scale at an institutional level. One critical development is the way Ripple is embedding RLUSD as a core financial tool in enterprises. Large corporations traditionally face delays in treasury operations. Sending funds across borders can take days, and businesses have to plan around banking hours and weekends. With RLUSD and the XRP ledger, companies can settle payments instantly at any time, even outside standard banking hours. This is why institutional adoption is happening quietly but steadily. Companies are solving operational problems in ways that legacy systems simply cannot. This is not speculation, it's practical efficiency. XRP ETFs play a complementary role. By being seeded with hundreds of millions of XRP, ETFs act as both liquidity pools and credibility markers. Institutional players see that XRP is being held in regulated vehicles, which reduces risk while increasing confidence. This is why ETFs are important for adoption beyond retail. They create a foundation for legitimate institutional flows, which can scale much faster than individual trading volume. Combine this with RLUSD's use in enterprise and trading platforms, and you get a multi-tiered adoption model that covers investment, liquidity, and operational needs simultaneously. The partnership with LMAX is another key element. LMAX processes trillions in FX and crypto trading volume, and integrating RLUSD as collateral is huge. It means RLUSD is no longer just a token. It's embedded in high-stakes financial transactions from institutional trading to corporate hedging. Ripple's $150 million commitment further signals confidence in RLUSD's long-term viability. It is now positioned as a primary infrastructure asset supporting both liquidity and settlement. In other words, RLUSD is becoming part of the financial backbone that large institutions can rely on daily. Regulatory clarity continues to strengthen Ripple's position. EMI licenses in the UK and EU remove barriers for banks and fintechs who may have hesitated due to legal uncertainty. This is especially critical for cross-border payments and treasury operations. Ripple is now legally cleared to operate at scale in multiple major financial regions, reducing risk for partners while increasing adoption potential. When regulators give this kind of approval, it is not just symbolic. It drives real confidence among institutions that want to integrate digital assets into their systems. South Korea also adds strategic leverage. With upcoming legislation for tokenized securities, XRP is well positioned as one of the most traded assets in the country. This means Ripple can integrate XRP into tokenized securities infrastructure when the framework becomes active. Enterprises, banks, and even governments can use XRP and RLUSD for settlement, collateral, and real-world asset tokenization. Ripple is effectively future-proofing its network, ensuring that when new regulations go live, it will already be a preferred partner. The insights from industry insiders confirm this trajectory. Stephen McClure highlighted XRP's emerging role in tokenized real-world assets. Reese Merrick explained how RLUSD is already solving practical liquidity challenges for enterprises. When you combine these insights with strategic partnerships, regulatory approval, and ETF adoption, a clear picture emerges. Ripple is building a multi-layered institutional adoption strategy. It is not dependent on retail hype or price swings. It is about creating an infrastructure that banks, corporations, and institutional investors can rely on long-term. Liquidity is central to this strategy. By integrating XRP and RLUSD into institutional platforms, Ripple is able to provide primary liquidity for large-scale transactions. This allows banks to move multi-currency funds efficiently and reduces reliance on slower, costly legacy systems. The combination of settlement speed, low cost, and regulatory clarity makes XRP Ledger and RLUSD compelling for real-world operations. It's the kind of adoption that fundamentally changes how money moves globally. Finally, the long-term picture is becoming clear. Ripple is no longer just a payments company. Through strategic acquisitions, partnerships, licenses, and ETF adoption, it is positioning XRP and RLUSD as core infrastructure for global finance. The XRP Ledger is solving problems that traditional banks cannot. Instant settlement, low-cost transactions, and real-time liquidity. These developments are quietly creating a network effect where adoption feeds adoption, making Ripple's infrastructure more valuable every day. What it means for institutions and why 2026 could be a turning point. Up to this point, we've seen Ripple acquire G Treasury, secure EMI licenses in the UK and EU, integrate RLUSD into institutional platforms like LMAX, and witness huge milestones and spot XRP ETFs. Each of these moves is significant on its own, but together they form a cohesive strategic ecosystem that is changing how money moves globally. Ripple is not just offering a payment solution, it is building a full enterprise financial infrastructure that bridges traditional finance and digital assets. One of the most important aspects is the institutional adoption pathway Ripple is creating. G Treasury gives Ripple access to major banks and Fortune 500 companies and through RLUSD and XRP. These enterprises can now settle funds instantly across borders 247. This eliminates delays caused by traditional banking cycles, reduces costs, and creates operational efficiency that was previously impossible. Enterprises are starting to see this as not just a convenience, but a necessary evolution in finance. Real adoption is happening because Ripple is solving real-world problems, not because of marketing hype or price speculation. Stablecoins like RLUSD are central to this strategy. By embedding RLUSD as core collateral in institutional platforms, Ripple has turned it into a working financial asset. Banks, brokers, and corporate clients are using it for liquidity, settlement, and cross-border operations. This is a very different role from consumer-focused stablecoins like USDC or Tether, which are mainly used for trading and retail transfers. RLUSD is becoming infrastructure. It's how large institutions move money, manage risk, and optimize treasury operations. Ripple's $150 million commitment to LMAX highlights how serious they are about backing RLUSD with real capital. The regulatory side cannot be overstated. EMI licenses in the UK and EU reduce risk for institutions, allowing them to use Ripple's infrastructure without worrying about compliance. This is a major factor that differentiates Ripple from most other crypto projects. When large financial organizations see a regulated path to using XRP and RLUSD, adoption accelerates. South Korea's new tokenized securities legislation further reinforces this trend. XRP is already one of the most traded cryptocurrencies in the country, and when the legislation takes effect, Ripple will be ready to integrate XRP into tokenized assets. This positions Ripple as a future-ready network that aligns perfectly with global regulatory developments. Liquidity remains a key driver with XRP and RLUSD integrated into institutional trading venues like LMAX. Ripple provides primary liquidity for high-volume transactions. Large trades, multi-currency settlements, and cross-border operations can happen instantly with minimal cost. This is exactly what banks and enterprises need to move away from slow, expensive legacy systems. The combination of speed, cost efficiency, and regulatory compliance makes XRP and RLUSD compelling choices for global finance. From a strategic perspective, Ripple's moves indicate a long-term vision. Unlike most crypto projects that focus on retail adoption or short-term price gains, Ripple is building infrastructure that institutions will rely on for decades. Each acquisition, license, and partnership is a building block in a network designed for mass adoption in the institutional and corporate space. This is why adoption is happening quietly. It's about real-world utility, not hype cycles. The ETF milestones tie into this ecosystem by providing liquidity and credibility. Hundreds of millions of XRP are now held in regulated ETFs, which adds legitimacy and encourages further institutional participation. This complements RLSD's role in treasury operations and LLMAX's trading infrastructure. Together, these pieces create a self-reinforcing adoption loop. Regulatory approval encourages institutions to use XRP and RLUSD, which increases liquidity, which strengthens ETFs, which then encourages more adoption. Finally, the real story here is about integration at scale. Ripple is combining technology, regulatory clarity, and capital to create a global network where XRP and RLUSD are not just digital assets, but functional tools for moving money, managing risk, and facilitating real-world asset tokenization. By 2026, these moves could position Ripple as the go-to network for institutional crypto operations, cross-border settlements, and tokenized assets. This is why paying attention to XRP and Ripple now is not about chasing price. It's about watching the emergence of a new financial backbone for the global economy. To wrap up, Ripple is quietly executing a multi-layered strategy that positions XRP and RLUSD at the center of institutional finance. Acquisitions like G-Treasury, partnerships with LMAX, EMI licenses, ETF growth, and positioning in markets like South Korea all converge to create real-world adoption and liquidity. Unlike most crypto narratives, this one is based on solving real financial problems, regulatory compliance, and infrastructure development. The story is far from over.